Okay, 50% of you are here today. Giorgio will be here. That'll be 60%. Maybe Lorenzo. Okay, we're pushing pre-registration this week, no matter who your advisor is, no matter what your major in. But Kevin, are you pre-registered?
Yeah, I got to talk to Dr. Melvin today.
All right. Now, I had some county majors last year. They did a few of mine at Dr. Steve and a couple of Dr. Well, so Kayla, she's getting hers pretty well under control. Tanda, I think you and Robert and Olivia all went through straight last week.
Yes.
Okay. We're pretty much good to go. But Kevin, I'm gonna stay on your butt until you get everybody done. Okay? And all right, let's okay, let's get into budgeting, and we're not gonna stay forever on this chapter. You've had it before in managerial. You're gonna have to do a cash budget. That's gonna be your ultimate problem. And anyway, Kayla, what was your homework for today?
56, 57.
All right, 56, 57. Go ahead and be looking. I gotta bring this up anyway. All right, we're gonna take a few minutes and look at your problems on budget, and we're gonna leave this chapter and proceed into new material. Let's look at these problems real fast. Kayla, did you confirm that that was 56 and 7, and what else?
That's the only two I have written down.
Anybody else? Is that it?
I think 54 is there.
All right. Come in, Lorenzo. I don't have 54 in my bookmark, Kevin, but it still may be right. Anybody else have 54 for homework today?
I mean, I haven't done it.
You have it done? Then I must have it signed for homework, because Kayla, you wouldn't do it unless it was assigned. Is that about right?
That's not right. I don't know anybody has to do it either way.
Yeah. Let's look at these and get them out of the way. 54, this company has incurred substantial losses for several years. The company petitioned the court for protected from creditors. That's one of those bankruptcy deals. I forget which chapter it is, and the court lets you reorganize without complete bankruptcy. But anyway, we have a balance sheet here, book value and liquidation value, and we have liabilities here. And management informed the court that the company has developed a new product and that a prospective customer is willing to sign a contract for the purchase of 10,000 units. And let's see, and 12,000 units later, at a price of $90 per unit. They expect to sell 15,000 units during the year, ending in March 15. Unit production cost are materials, labor, and overhead. Fixed cost is given. the creditors have agreed to reduce their total claims. All right. Ignore any need to borrow and any need to repay short-term funds for working capital. Prepare a cash budget for the years ending in 14 and 15. Now you had information here that is presented different than any before. Okay, so let's see how you might have handled this. Kayla, you said you had it worked, right?
54.
Yeah. What is your cash received from customers? I'll get down to it. All right. Kevin, you had this some work too, didn't you? Did you have collections in 14 of 825,000? Did you have collection 1,065,000? All right. That was their sales. I think that was out given. You may have had to multiply units by price. Beginning accounts receivable liquidated in 13 was 0, and 15 would be 75. In accounts receivable, 75 here, brought here, and then of course 90 in 2015. So you had to do your collection and any cash budget. You got to know where your money's coming from. Now collections from sales and accounts receivable is a company's major money coming in. Now there could be other money coming in, but most of our products don't mention that. Now once again, you know where your money comes from. Okay? Just like a cash flow statement. You know, your sources of funds and your use of funds, okay? Here, you got to know your revenue coming in. All right, then we have disbursements. All right, Kayla, do you match this? Disbursement, 220 and 249, 167. You match that on disbursement.
Yeah.
All right, I'm assuming everybody else does. All right, 2015, unit sales is 12. We require 2,500. So we need 14.5. Our beginning inventory is 2. So we need the production of 12.5. And direct material cost is $20 a unit. So we need to spend 250,000 materials. And this delayed payment is 112, I suppose, however that's worded, you have to look at it. And the previous balance is 20 to 47.9. Collections and disbursements for direct materials. But there's other expenses, we know that. So here's your cash budget, once you put it together. Beginning cash balance, collections, total. Your disbursements. Your direct labor is $30 a unit, $375. Variable overhead is $10 a unit, $125. Fixed cost is $130. So your total cost, cash available, $90,833. Right, total collections. Cash available, subtract 879, get 90,833. Now, payments to creditors, you'd have 0 left, wouldn't you? You pay credit. All right, is there any question on this problem? Maybe that you folks in the back get the same answer. Okay, we had 56, Now look at these collections and see if you have a problem with any of these collections. '56, page 345. You got your January through June sales. They get, well, you got them for all year. Prior month sales, you collect 60% of it. 2 months prior sales, you collect 40% of it. So we're not getting any cash sales. Is that problem? Was there no cash sales? Or is this credit sales? Look at the problem. The process of formulating plans for Carla Jordan, Director of Marketing, blah, blah, you have this forecast. George is the controller, and let's see what he adds to the problem. Blackman has experience in excellent record in accounts receivable collection. The company collects 60% of its billings in the month after the sale and 40% in the second month. Uncollectible accounts are insignificant. So we do collect 60% of last month's sale and 40% of 2 months ago's sale. Okay, so here's collections. All right, your sales. Now, materials cost 50% of sales, 50% of 4, 36, what have you. The materials receipts, I have to read that, but this month's 40%. I guess 40% of 2,000. And next month's cost 60%. That's 60% of 18,000. If I multiply 18 by 60, see if that's 1,080. I think it is.
Yes.
Okay. All right, so it's 6% of next month. Okay, so here's our total receipts, sales, materials receipts, total receipts, materials payments per month. 80% of what? 80% prior month's goods. All right, 80%. So I multiply 1,800 times 80%.
1440.
It's not corrected, is it? What am I multiplying 80% by? Prior month's goods. %% of what? It's not 2,000. We try 80% of 18,080. I'll have to read the problem. Try 80% of 18,080.
1504.
Not it either, is it? All right, so where does the 1632 come from? Tanda?
80%.
80% of which one?
2040.
80% of March, right?
March.
Okay, 80% of March. This says prior month. I don't know what I was looking at. I was looking at here instead of receipts. 80% of 2040 is 1632. All right. Now I have to read the problem. Okay, materials payments, total payments, 2008 and so on. Now your administrative expenses, some of these are straightforward. Salaries is 1/12 of annual. Promotion 1/12 of annual. This is 1 month. Property taxes, you pay them every quarter, so it's 1/4 annual. Insurance 1/12 per month. Utilities 1/12 per month. Total expenses 3,420. Now this one, did you have trouble with this one? First quarter's prepaid taxable income. equals net income divided by 1 minus the tax rate. If the tax rate is 40%, you're simply dividing net income by 60%. That gives you 2,040,000 before taxes. All right? Somebody multiply 2,040,000 times decimal 40. Multiply this times decimal 40.
816,000.
All right, now whatever you got, subtract it from 2,040,000. Subtract that now from 2,040,000.
1,224,000.
It gives you the amount before taxes. Here, I just took the tax rate of 40 and subtracted it. Then left your net income after taxes. And that's why you can divide net income after taxes by decimal 60. Decimal 60 is what you gotta keep. Decimal 40 is what you gave to IRS. Now, how many of you have filed your personal tax return this year? All right, 2 or 3 of them. All right, I had a message. I was out of town over the weekend. When I come back Sunday night, I had a message on my phone. We have looked at your tax return and we think you have committed fraud. Now, a mistake and fraud are 2 different things. Fraud is bad. All right. You are to call. They spell this out real clear. You are to call IRS this number immediately when you get this message. Your tax return shows a lot of misconduct. Okay. Now that would scare a lot of people. It didn't bother me. IRS, I don't think works that way. You can contact you by paper, what have you. So I tried to return the call that night, there was nobody answering, so this answer machine is not taking messages. So I called it back yesterday when I went home to work, and somebody answered. And I said, yeah, I am returning your call. And he hauled around about something. I said, I am 95 years old. I have not filed a tax return in 25 years, and I don't appreciate your message. He hung up on me. So, would IRS have hung up on me? No. I didn't tell him my name yesterday, I just called back that number. So beware of scams that are happening every day, everywhere. Have any of you ever got a call from support your state police? Anybody ever got a call? Charity? I think the government pays our state police. I get those calls about every week for your state police fund. I get those calls about every week. I think the government pays our state police. We don't have to raise a fund individually to pay them or help them. Now, if a policeman got killed in the line of duty and his family, they need help, I'd be glad to help with something like that. So beware of scams. Every walks of life, even down to our age. Now, Lorenzo will get that call legit, in about 3 or 4 months where I told him not to even file. He can blame it on me if he gets that call. All right, look at the rest of the problem. Now, your tax expense is 40% of the 2,040. This is what Giorgio calculated, 816. We subtract it from the 2,040 and we get to 1,224,000. But here is your budget of cash receipts and disbursements, which is a cash budget. Beginning cash, collections, total available, materials, wages, administrative, taxes. If do the taxes, well, you only pay them once a quarter, I guess. Total disbursements, You got a 44 deficiency. Cash borrowed, 244,000. That gives you a 200,000 ending balance that you would like to have. All right, that's what we start with up here. And we start with that every period, and we end with that with every period. Here you had a good cash balance, so you want to invest 468. All right, you want to invest that in short-term T-bills. Here you want to invest 600,000. So hopefully you're doing okay with these cash budgets. All right, what did I say about number 57? Remember what I said about number 57?
It's gonna be like the problem in exam.
Huh?
It's gonna be like the problem in the exam.
Yeah, what else I said about it? I didn't tell you, I at least had, look, I had it written down for your attorney. Okay, so I'll take part of this sale, please turn it. Probably be your moment something next to you. How many people have it? One. All right, I'll take that up Tuesday from everybody. I'm 57, I'll take it up Tuesday. Well, I mean Thursday from everybody. Everybody that has it Thursday. So I'm gonna let it go for right now. And we're gonna back up and do another cash flow problem later. But right now, do that one for Thursday, and we're moving on to another chapter. We are behind, and I need to get into break even. All right, this chapter is I selected this book, but I selected the time, I thought it had a whole lot of difference. Man, sure, but I know we had cost profit analysis and we had break even in managerial. So here we are again. All right, let's look at a few PowerPoints and so forth. This next test, you'll need to do a cash budget. We'll need to do this contribution margin. Cost volume applies to manufacturer, wholesalers, retail, and service. It applies to every type of business. Variable costing, we know what that is. Separate costs into fixed and variable. Separates, shows fixed costs and lump sum amounts, not in per unit. Does not allow for deferral or release of fixed cost. Now that's variable costing. We had that and absorption costing. But we know that, what does an income statement look like? Does anybody remember for variable costing? Giorgio, do you remember? I take sales minus what? That gives me contribution margin minus fixed costs gives me net income. All right. Sales minus variable costs minus fixed costs gives me net income. Now that's variable costing. The absorption costing, we took sales minus cost of goods sold gives you gross profit minus other costs gives you net income. There's not a lot of difference. We talked a little bit about relevant range, not much. Revenue per unit remains constant. Variable cost remains constant. We know prices change. Graph approach to break even. You do not have to do this. I mean, you can do it at different levels. You can do a graph, but I don't want you to buy graph paper or go drawing. So if you see a problem with a graph, ignore it. But we can't ignore the formula. It's pretty easy. Same formula we had last semester. And I usually scribble it down, fixed cost over 1 minus variable cost. Sales price is 1 minus variable cost. I usually scribble it down as that. Now, all right, here they've got fixed cost, 1, selling price minus variable cost is 12,500 units. Now, take what information you have here and take what information you see here and do this. All right, do this statement. I want you to do a contribution margin statement. You might want to scribble down these letters. Sales minus variable cost gives you contribution margin minus fixed cost. If you got a good memory, you don't need to jot them down. All right, take that information.
I mean, it's like, I think I've only one being like, but I got like my first semester, I got here before even the work, like, was international business. I mean, like, I was wondering if I could retake that class. Yeah. Also, it was an expensive class.
But no, this year, it's in at the one with outstanding, $1,000.
Really?
The other one did. The other one did. But depends on how many votes you get. Yes, I know that is. Both of you are doing, you're doing a double take, but and we'll hear that that's what she's doing, same kind of thing.
Yeah, she has a high education.
Well, so those, we have to turn in 3, I have to turn in 3. Yeah, by vote.
But that's like for, like, that's the overall.
Yeah, they'll give one of you 3 will get $1,000 off. One of you 3 will get nothing. But we go, I go by JPA, because you want to get this.
Sure. So,
To work. Actually, that's what we're looking at.
still even with $100, we would be at the top.
No, even 500 would be bad. Okay, you should have that. Okay, so 12,500 units times $12 is how much? Sales is how much? 12,500 units times $12 is how much? Sales is 12,500 times 12. How much is that? How much? 150. This is that pen that don't write so good. All right, now my variable cost. That would be my sales minus my variable cost. And what is my variable cost? What is $4 times 1,250 or 12,005? 50. All right, now that leaves me a contribution margin of how much? All right, and what is my fixed cost? All right, and at 12,500, I'm supposed to break even. And I just did a contribution margin statement. And so did you. All right, they did some proof. Well, they did the same thing here I asked you to do. So here's your final answer. Now, what if we want a profit of 30,000? We just add that on.
Wait, that's still the formula for the break even?
Do what?
That's still the same formula for the break even?
Yeah, but now a target profit.
Why are they dividing by 12?
Well, let's not do that. I want you to test out something. Divide 130,000 by 8. Divide 130,000 by 8. And tell me what you get.
16,250.
16 what?
16,250.
All right, this is your break even in units. What they're giving you here is dollars. This is the dollar profit you wanted.
Oh, okay.
And here, the break even is units. Now, if I throw this down here, that's like dividing 8 by 12. What is, all right, here's 130,000. So let's multiply 130,000 times 8 over 12, which is 2/3. Multiply 130,000 by 2/3 and see what we get. Does that work? That give you 195? No, that won't work. You're dividing by 2/3. When you divide by 2/3,
You're multiplying by 0.6.
you're multiplying by 3/2. Or you're multiplying by 1.5, yeah. So what is 130 multiplied by 1.5 or 3/2?
86,600.
No, 130 multiplied by 1.5.
195.
Huh?
195.
195. Now,
I mean, the same thing you can get by 16,250 multiplied by 12.
do what now?
16,250 units multiplied by the sale price.
All right, now multiply 16,250 by 12.
195 by
One what?
195.
Yeah, that's break even in dollars. Or even profit with the dollars there, yeah. Okay. Just another way of looking at it. Now, I always tell you to break even in dollars is, all right, that formula would look like this. Fixed cost over 1 minus your variable cost as a percent. All right. Now, pretty much what they're doing here.
Percent of what?
All right, now let's look at this. 1 is 12, right? We'll call that 100%. What percent of 12 for your variable cost is what percent of your selling price?
33.
It's 1 minus 1/3. All right. So now you're back to 2/3. You're back to fixed cost minus divided by 2/3. And we go right back to what we were doing right here. 8 over 12 is 2/3. Flip it over, it's 3/2, 1.5. There's two formulas for break even. Here is the one they're using here for dollars. The one I always give you is for units. Okay. And you can always do the income statement proof, which is your contribution margin proof. Okay. I'm going to leave this up here a minute. We're going to practice a problem. That's one way I can get you involved, is to practice a problem. All right, do number 18. Number 15. Look at number 15. I want you to do A and B. A and B, and I want you to prove B by this income statement. Page 376, number 15, do A and B and prove B. This method. Well, right here, target price.
And you want us to do the income statement?
Yeah, I want you to do this one on the target profit. All right, what's your break even in units, somebody?
In A,
Yeah, in A,
325,
how much?
325,
What's your break even in B?
575,
Well, not break even, you're gonna make a profit, how much?
575.
I want you to do 575 and do this part. Okay, Olivia, when you multiply 575 times your sales price, what do we get for sales?
1,035,000.
1 million what?
35,000.
All right, Giorgio answered that for you. Olivia, when you take 575 units, what is the variable cost per unit?
575,000.
What is your variable cost per unit, though,
Per
George?
unit, $1,000.
1,000?
Yeah.
So that would be 500 and Lorenzo, what is your contribution margin? Have you got that?
Yeah, yes. Per unit,
No, just contribution margin total.
460,000.
All right, and then your fixed cost was how much?
260.
And then is 200 your target profit?
Yes.
That is correct, right? Okay, so for homework, you got a problem, some of you to hand in. You got to read this chapter and I want you to just do 2 or 3 exercises, not many. 17, 18, 17, 18, 22. So try to read the chapter. 17, 8, these are short. 17, 18, and
22.
22, that'd be enough. All right. Now, this is what we had last semester, folks. Now, going on incremental analysis. We're not finished. Let's give me a few more minutes. Incremental analysis focus only on factors that change from one option to another. Changes revenue, changes cost. The break even increases when fixed cost increases. So incremental is that extra. All right, break even will definitely increase if your fixed cost goes up from 100,000 to 110. Sales price decreases. If sales price went down from $10 to $8, you know your break even changes. That's all they're saying here. And if your variable cost goes up from $4 a unit to $5 a unit, you know that's going to change your break even. So we practice that also in managerial. But I can't assume that everybody's had managerial, but most have. All right. Then we got to look at a multiple product analysis. We got a sales mix here, multiple product, $3 and $2. Contribution margin is $2 and $1. Fixed cost is $8,000. So what do we do here? We take fixed cost in our formula. We take 3 times 2. All right. Contribution margin per unit. And 2 times 1. So our break even will be 1,000 bags. So we'll pick up with this on Thursday. I'm going to let you go today. And if you haven't pre-registered, please do so. I think most of you have.